All righty. Good afternoon, good morning, everyone, and welcome. I think today, I think Mike is working on something else. I remember him telling me a couple days ago that he needed me to run the Tuesday show. So that's what I'm going to do. And, I want to start off here by taking a look at what's going on in my X feed because, we're going to take a look here at some news. So let me go ahead and let's just run through some news items. I think probably the easiest way for me to do that is to just head on over to x.com on my browser. And then what I want to do here is I want to take a look. There's a couple of things that, starting off with Japanese yen. I want to take a look at the yen. Seems as though that might be, a point of contention today. Looks like the yen is breaking above 162. That's likely going to be, a level where there's going to need to be some type of intervention at some point. And what does that mean, intervention? Well, it means that, they're going to have to sell treasuries, the Japanese government, they're going to have to sell treasuries, and they're going to have to buy yen. That's what's going to have to happen here. So let me see here. What I want to start off with is, let me just get this put into place so that I can see everything clearly. Perfect. All right. So first things first, I want to go ahead and mute the politics stuff, mute sports. I want to mute entertainment and arts. I want to mute gaming, and I want to mute videos also. Well, you know what? Maybe we can watch some videos. So I'm going to snooze those 4 topics. And I wonder if I could get rid of this crap on the side. Maybe not. Even if I zoom in, okay, better, much better. Great. So let's see what we got going on here. I want to start off by just searching for something about the Japanese yen. So yen, Japan yen. Because, this has always, for crypto, this has always been something that's, driven negative returns, let's say, shall we say, negative returns. And if we're taking a look here at what's going on with crypto today, if we just go ahead and zoom out on this chart here, I want to zoom out and take a look over here in my trading view real quick. So if we just take a look at what's going on with Bitcoin today, Bitcoin has been taking a little bit of a dump, a little bit of a dumpy dump here on BTC. And now there was a little bit of a pump after the initial dump this morning, and it gave it right back. And so this candle here on the hourly, this is an indication to me of like significant selling pressure. And so if you see, a dump like this, when we're sitting at what should be some level of support, I mean, this should be a level of support, right? This should be some type of a double bottom. We put in a couple of wicks here on the downside. We should get some type of a bounce. If we don't get a bounce, well, then I think that we might end up putting in the trough for the summer, like over the next couple of days. Like if this really doesn't hold, then I think we go to 50, and that's probably the trough for the summer. And then we get a bounce into July, and then August, September, chop sideways and lower. And then we start buying in October. So very, very close. We're 3 months away. So tomorrow, I think, isn't tomorrow the start of July? Tomorrow's July 1st. I think so. So let's say that tomorrow is July 1st. I don't think there's 31 days in June. There might be. I never learned the number of days in a month. Are there 10 days in a month? Fuck if I know. But so I'm pretty sure tomorrow is the start of June. And even if it's not, we're basically like 90 days away from the beginning of October. And that's when the prophecy says that you can start buying Bitcoin. And, I was talking to a guy at a bar last night, and he says that he's a day trader, right? A Canadian day trader. And he was telling me that he's afraid of crypto. He doesn't like crypto. And I asked him why. And he told me that he thinks it's too scammy. And, look, I totally get it. It's super scammy. It is. And it's super scammy because you got projects like XRP in the top 10. That's why it's so scammy. When you look at the top 100 projects and you see, scam after do nothing coin after do nothing coin, it's like, well, yeah, no wonder people get turned off to crypto, because if we just run through like the top 100 here, I'm just going to zoom in so we can see this over on coin market cap. Bitcoin, the moment that Bitcoin has smart contracts or covenants, it's going to eat DeFi on every other chain. Maybe with the exception of Canton, because I don't think that, banks are necessarily going to want, a DeFi denominated in Satoshis. I think that's more of a sovereignty layer. Ethereum, I would love for ETH to become, more private. If that happens, then I think that ETH could actually, really survive and do extremely well long term. Tether and Circle, USDT and USDC, these are CBDCs. So make no mistake, Tether and Circle are central bank digital currencies in disguise. BNB, this one has a lot of users. The BNB chain has a lot of users. And there are, some interesting opportunities there sometimes. But if we're talking about like scams, Binance is like the king of scams. How many times have you seen, a winter mute special, where especially they like to run these winter mute specials over the weekend, usually like on a Saturday evening with thin liquidity. There will be a winter mute Binance dump where they'll just, sell everything, and you'll see everything down in lockstep all at once. Binance is a bad actor in the space. And so I'm really happy that, they're exiting the European market. And to be completely honest, it sucks to be a European or a Canadian. It really does. All the people that I've met here in South Florida who are European or Canadian, they all say, man, I wish that I could get citizenship and live in the United States and live in South Florida, not live in California. Live in Florida, because California is going down the same path as the Canadians and the Europeans. It's a real shame. It really is. They've imported fucking people from shitty third world countries, and they've turned off their energy production, and they've regulated businesses out of existence, and they tax people at like 70%. It's fucking nuts. Like, you can't be successful in Europe or Canada as an entrepreneur. It doesn't exist. That's why there are no European or Canadian tech companies to speak of. They don't exist because the framework for success as a free sovereign individual doesn't exist in Europe and Canada anymore, if it ever did. So BNB, they're leaving the European market. And a lot of other exchanges are leaving the European market too, because, MiCA, that European framework, they just want to tax the fuck out of everything. Like, that's what it's all about. It's about, how do we, surveil and steal from our citizenry as much as humanly possible. And that's what MiCA is all about. And they frame it in this KYC AML bullshit language. That's not what it is at all. It's all about taxation and theft. So, BNB and a bunch of other exchanges leaving the European market, I hope that if there are any Europeans that come across this piece of content, that, reach out to me. I can show you how to become sovereign. I can show you how to safely self-custody your assets. So yeah, BNB, I think it's some type of, I think Binance is a bad actor in the space. And I think that BNB as a chain, like, if I'm thinking about amazing DeFi opportunities, BNB does not come to mind for me, like, ever. If I'm thinking of opportunities in crypto and I think BNB, I'm thinking pump and dump schemes. That's what I think about, because that's what BNB is, a pump and dump scheme, a pump and dump chain. It's basically like the EVM version of Solana. Solana is the meme coin casino, the pump and dump scam chain. And that's what BNB is on EVM, on the EVM side. And then you got XRP. Like, this one is just a straight up fraud, so XRP, these guys, I think this protocol started in like 2014 or something, like very, very, like in crypto time, that's an eternity ago, so this has been around for a long time, but for the first, decade, of Ripple XRP's existence, they shipped nada. They didn't have a product. The product was the XRP token that they dumped on retail to pay their salaries and build nothing and ship nothing. This is a fraud. This is a straight up scam. And this is in the top 6. Like if you exclude these CBDCs, USDT and USDC, if you exclude these two, then, we're talking about, the number 3 and number 4 by market cap protocols in crypto are like scams. And then you got Solana, which is like the king of the scams. We're talking about straight up gambling, meme coin gambling on Solana. So like in the top 10, you got BNB, which is just, Chinese scam chain. You got Ripple XRP, which is a straight up fraud. And then you've got a gambling casino, which is what Solana is. So like this sucks. So it makes sense to me that when I talk to people who, don't live in Web3, in crypto and DeFi like I do, and I ask them, what do you think of crypto? And they tell me, I think it's a scam. Well, I get it. Because in the top 10, you've got literal scam bullshit projects. And then once you get outside of the top 10, I mean, Dogecoin, at least if you're buying a meme coin, that it's a meme coin. But if you're buying XRP or Solana, people think that they're buying something of value. And, Solana's tokenomics are totally broken. Now, I know that there are proposals to fix it, but, there's also got to be like, what is the French phrase, raison d'être or something, reason for existing? I don't see the reason for Solana existing. Same thing with Sui. I mean, maybe they'll do something interesting, but I've got that Solana seeker phone. What a piece of shit. So yeah, not happy with that seeker phone. Tron is kind of interesting just because of the value accrual mechanism. And Hyperliquid, obviously there's product market fit for Hyperliquid. This one generates what they call cash flow. This is actually a successful product where people find value in using it, and it generates revenue as a result of that. That's real product market fit. And, I think that outside of Ethereum and Bitcoin is basically just a very decentralized meme coin. If we're being completely honest, it's a pet rock that does nothing right now. I hope that there are, covenants and DeFi on Bitcoin, because in the absence of DeFi on Bitcoin, it's not digital gold. That's not what Bitcoin is. Bitcoin is basically, it's not a store of value either. Like if you exclude the first 5 years or whatever of returns on Bitcoin, after Genesis Day, and like basically after Pizza Day, if you exclude those first 5 years of returns, because it skews everything else, and you look at maybe just like the past 5 years of returns for Bitcoin, in the past 5 years, why don't we take a look at that? That could be interesting. So if we take a look here at, let me just hide this so we can see this a little bit more clearly. Let's go BTC in SPX terms. So SPX, so S&P 500, there we go. BTC USD in S&P terms. This is what I'm looking for here. And, this is a daily. What I want to do is I want to zoom out to a weekly. Okay, so, and let's take a look at the last 5 years of returns. So 5 years ago, let me go ahead and mark this with a vertical line. So 5 years ago, 2026 June. So let's go back to 2021 June. Let's go back to 2021 June, right here. So 2021 June, there we go. That is 5 years ago, 2021 June. And I think we've moved sideways. Like, this is not what positive returns look like. This is, against the S&P 500. So if you've held Bitcoin over the last 5 years in S&P terms, you've made nothing. So this is not good. If we just take a look at BTC in US dollar terms, okay, that's great. But you might want to take into account USM2. So if I go USM2, that's money supply. So this will give us more of like an inflation adjusted return profile for Bitcoin here. And if we go back 5 years again, okay, there's June 2021, like so. And then I say, okay, well, what have the returns looked like in inflation adjusted terms here for Bitcoin over the last 5 years? Great, it's up 65%. Awesome, right? Well, if we take a look at the S&P 500 and just take a look at the return here over the last 5 years, let's go ahead and do that. So here's June. Let's go to June. Where is June? August 2021, June 2021. There it is. So that's 5 years ago. Great. That's the S&P. Now this is just S&P cash, right? So over the last 5 years, S&P just in US dollar terms up 80%. Okay, but that's not enough. We got to go ahead and take a look at S&P and USM2. So if we take into account inflation, so inflation adjusted returns for the S&P 500, oh my God, I didn't realize that. Inflation adjusted S&P 500 is just now gotten back to its 2000 highs. Wow, I didn't know that. That's amazing. If we go ahead and mark 5 years ago, just to continue the exercise real quick. So April, May, June. Where's June? There's June 2021. And then we go ahead and let's see what do the returns look like? Up 60%, 58, 60%. That's inflation adjusted returns. So how in the world does it make sense to hold Bitcoin if, over the last 5 years, inflation adjusted wise, compared to the S&P, inflation adjusted S&P, you've matched the performance of the inflation adjusted S&P. It doesn't make sense to hold Bitcoin if its performance has just matched the S&P over the last 5 years, accounting for inflation. And here's the reason why. Bitcoin's volatility is like 3 or 4 times that of the S&P. So the only reason why you would want to hold Bitcoin is to have a shot at asymmetric upside. But if you're not going to get any of that asymmetric upside, then you're just holding something that is literally a pet rock that does not produce any value. Like Bitcoin is not a productive asset. It's kind of like gold. There's no yield on gold. And same thing's true for Bitcoin. There's no yield on Bitcoin. Bitcoin needs smart contracts, or I think it could actually die. And I think that there are people who are very, very smart who will, implement a Bitcoin improvement proposal for covenants in the near future, over the next couple of years, hopefully. And if that happens, well, then I think that Bitcoin eats the world. I think that, it would, DeFi denominated in Satoshis, I think would be the ultimate sovereignty layer. In the absence of that, though, like you've really got to just take a look at what it is that you own when you own Bitcoin and be able to call a spade, right? Like, it's not productive. No yield is what I mean. It doesn't generate any yield. The business model for the miners really sucks. The halving cycle, that if there's not enough transaction volume for Bitcoin on its layer 1, eventually the halving cycle is going to kill the miners. So, there needs to be real transaction volume. That's why the big miners don't want to turn off, they don't want that Bitcoin improvement proposal for ending inscriptions. So inscriptions on Bitcoin blocks is like 30% of their fees. So they're incentivized to not end that. They need fees because the block rewards have been cut so many times now that 3 1/8 Bitcoin for mining a block. What happens in 6 years when we've gone through 2 more halving cycles and Bitcoin's reward, its block reward, is less than 1 BTC. The only way that miners are incentivized at that point to keep their machines running and mining Bitcoin is, number one, if the price just goes parabolic, or number 2, if there's real transaction volume on the Bitcoin layer 1 chain. In the absence of that, Bitcoin could actually die. I don't think that's likely because Bitcoin is I think it's really the only sovereign digital asset. Although you could make a case for Ethereum becoming something like that, maybe. But this is kind of a big deal here with the Japanese yen. So collapsing to the lowest level versus the dollar since 1986. So this is a big deal because every time the Bank of Japan has raised rates over the last couple of years, it's ended up crushing crypto. And so when I take a look here at BTC, I really do think that we head down here to 49K. I'm not this is the weekly chart for Bitcoin. And now that we're looking like we're about to really break down, I definitely want to enter some more short positions here. I've got the one long position on lighter. Just these are trades, right? So I'm risking 1% of my available margin. I've got a very strictly defined stop and TP. My risk management is much better now that I've got that getrunway.trade tool. So I've got a very well structured trade on lighter here, and I'm short Bitcoin. So long one, short the other. And the next thing that I'm working on here is, and I've got a bunch of notes on it, is alpha generation. What I'm starting to understand as I work through the process of building this getrunway.trade tool. Let me just go ahead and share this thing real quick. As I go through and build this, the directional and spread traders. So the directional logic is basically a multi-time frame logic. It looks at charts on 5, I think it's actually not 5. So 15-minute, 1 hour, 4 hour, 1 day, and 1 week. So it looks at 5 time frames, and it looks at RSI. It looks at volume profile, and it also knows a couple of basic chart patterns. And so that's what I'm using to help me develop a signal. And what I'm seeing here is that it's difficult to develop a signal and then turn that signal into alpha. And what is alpha? Alpha is a return in excess of a benchmark. So what's my benchmark for this? Well, the benchmark has to be the S&P. So if I can't generate alpha over and above 20% per year, well, then it's not working, obviously. So my goal here, now that I've built the app and I've built the autopilot, and so the autopilot in the settings, what that allows me to do is talk to this tool and have it enter trades for me. Now, what I built last night is, and what I'm starting to realize here is, I need to remove myself from the process of trading as much as possible. Like, I can't be in the loop. I need to let the agents do all the work for me. And so the way that I've decided that I'm going to execute on that is, number one, I needed to build the app itself. So I built that. And I needed to build the autopilot, which is kind of like the hands for the app. So the app controls Hyperliquid. It controls, a Hyperliquid account, and it can perform actions on my behalf. Okay, great. That's step one. Build the app, give it hands, allow it to control Hyperliquid. Done. Got that working. Now, the next thing is, well, I really can't be the one talking to the app, telling it, hey, these are my ideas, and then having it run me through a risk management process, because I can't be in the loop. And so to remove myself from the loop, I need an agent that runs the app. So an agent that lives on my local machine with a different model that runs the app. So the app uses Google Vertex, Google Cloud's model. So if I know that my app is running Google Cloud, Google's model, then I want my local agent that is going to control the app here. I want that local agent to be using a different model. So I use Zipu, which is the Chinese one. So that one I'm running on my machine, and it controls the app through, like an API MCP. So basically, what I need to do now, because I built that part last night. So I got the local agent, which is like, it's got hands to control the app. And then the app runs the agent through a process, and then the app controls Hyperliquid. So I'm completely removing myself from the loop. So now that I've got those three things built, the last piece of the puzzle here is, well, I need the logic in the directional trader and the spread trader. I need this logic to, divine a signal and turn that signal into alpha, outsized returns. And that's what I'm working on for probably the next couple of weeks. And so one thing that I built for myself to help myself do that is a tool that I call PaperFind. And this is super, super cool. So let me share this with you guys. So PaperFind. So what I realized as I was building out this app is that, the getrunway.trade app, is that I needed to be able to quickly and easily find STEM research, research papers, and I needed to be able to download them. So that meant I needed a tool that would go out and search for specific types of research papers and find the free ones that I can download. So, basically what I'm doing with this thing is, if I need to, find research papers, let's say on, alpha generation, or, divining a signal, rather than using divining rods, like how do I, take, a trading algorithm and use it to generate a signal that is actually useful for me? So why don't we use one of these? How about Wall Street strategies in finance? Great. Let's see what's going on here. Quantitative trading strategies. And let me hit search. Okay, awesome. So now I've got all these different papers, right? And I can sort by relevance. That's exactly what I want to do. I can sort by field. I'm probably looking for something in, maybe the trading or hedge funds. Why don't I go with hedge funds? Great, awesome. And year range. So the year range here is not quite as important as you might think, because there's a lot of great research from like the 1960s, from a long, long time ago. So, and then I need to say open access only. Okay, great. So now I've got all of these different papers, correlation and illiquidity in hedge fund returns, hedge funds in the technology bubble. This will be interesting. It says this, let's check this out. So this paper, because this is the tech bubble for the first one. So this paper documents that hedge funds did not exert a correcting force on stock prices during the tech bubble. Instead, they were heavily invested in tech stocks. Well, no shit. Of course they were. Okay, so that's, this is a little tool that I've built. Let's take a look at this. Statistical inference. And this one from 1973, linear statistical inference and its applications. So, what I've used this tool to do is I don't actually go through it myself. I use Cursor, and I programmatically call this tool that I built to find research papers to help me build features in my app. Because this app here, this getrunway.trade app, it's basically a conglomeration of everything that I know, as a trader over, greater than a decade of being obsessed with trading. But it's more than that. It's also, like a couple of hundred research papers that I have distilled into skills in Cursor. And so those skills are what are driving this, the directional and spread trader. But alone, they're not good enough. I have to go in and I have to understand the logic and signal generation in the directional and spread traders. And that way I can kind of guide it as I'm building it and end up with something that I think is actually going to work. in terms of like generating a signal that will actually consistently make money. So I think there's two ways to do that. These are the two trading styles that I like best. The directional one, which is the multi-time frame analysis on 5 different time frames, taking a look at a handful of different indicators together. I like that. And then the other one is the spread trader. So that's statistical arbitrage. You're long asset A, short asset B, and you're waiting for some type of mean reversion over a specific period of time. That is a great way to generate mathematical alpha. Like you've actually got an edge there. The directional trader, it's tough to say whether you've actually got an edge or not. There are some guys who really like the smart money concepts. This stuff. Let me share this. This will be interesting. So there are some guys over here. If I just let me open up a new tab there, and let's share this. So there are some guys who are enamored with smart money ICT concepts like this here. So smart money concepts here, and this is just a really clever Python. Looks like Python. Yeah, this is Python, right? So if I scroll up here, I think that this is just a languages. Yeah, Python. So this is the Smart Money Concepts Python repo. And so, this, rather than having to, recreate the wheel as a developer, if you want to build something, you don't necessarily have to just start from scratch. You can, take a look at GitHub, and there's a lot of open source stuff that is, right there available for free. You can clone these repos and use it as a building block within your app. So I think that this is something that I'm going to integrate into that directional trader to help me generate real signal and use that, because right now the multi-time frame analysis, it just seems so random. It's like there isn't really a valuable signal there. There's no edge. I think that integrating this in will probably help the multi-time frame and the directional trader a little bit. And then when it comes to the spread trader, this is really what I'm focused on over the next couple of days and weeks. Now that I've got the framework of everything built, I've got the app built, I've got the local agent that is like my hands that controls the app. I've got that built. I've got the autopilot feature built, so the app itself can control my Hyperliquid account and execute actions on my behalf. And I've got all the messaging built, so it sends me messages in Telegram. So I get messages on exactly what it's thinking with my open positions. So this is like a great starting point, but now I'm focused on generating edge and generating signal and making sure the logic generates a consistent signal, and that signal I can translate into alpha returns. So I think there's 2 ways to do it, and I'm going to focus on the spread trader because I think that that's probably the best way that I can generate a real mathematical edge that I can just repeat over time. And also, I'd be able to completely remove myself from the loop because, I've got emotions, I'm a human, and I don't have a decade of experience on a trade desk where I've learned, risk management skills and trading skills from professionals. I don't have that. So I need to rely on my ability to build tools that will recreate that. And then I need to remove myself from the loop entirely. So that's what I'm doing here with the spread trader. Now, what type of stuff can we trade with this? Well, we can trade just about anything. If you take a look at the ideas tab, it's going to come up with ideas. But what I found is that these ideas are, for whatever reason, it's actually pretty darn good at calling direction in the immediate term. It's really good at that, actually. But there's too much random walk. Like, it's good at calling direction in the immediate term, but then once you enter a position, it's usually too late. So the move has already happened. So the ideas tab, I'm going to definitely be improving this once the logic for the directional trader is better. And then when you go down here to the spread pairs, this is really where I'm going to be focused over the next days and weeks, is making the spreads work. because I think that that's where the actual mathematical edge lives, is stat arb. Because if you're trading asset A against asset B, and you've got there's a statistical relationship between the two, then you can actually generate real mathematical edge there. And if you can exploit that over and over and over again, just purely programmatically, using a computer program, algorithmically, and you remove yourself from the loop, I think that this will be the way that I'll be able to consistently generate returns. That's the goal. And so this is basically my focus, is the spread pair and the logic within it, and the directional pair, the directional trader and its logic. So what can you trade? Well, if we just say, new trade, right? Directional, I want to trade on mainnet. And what I want to do here is I want to trade the yen. I want to trade JPY. So let's just take a look. This is, of course, you only trade here on Hyperliquid. And so if we're trading JPY on Hyperliquid, well, what does that actually look like? USD JPY. Let's hop on over here to TradingView, and let's take a look at USD JPY. Now, this is a trade that I've been waiting for months, because now that USD JPY is up here at 162, and these data only go back, this is the wrong, I don't want Rwanda. I want something that's got more data. So there we go. This is going back to, and let's zoom out even further to a monthly, so that we can see a couple decades of data here. So it's actually, it's hit my level. So this is the level at which I want to be entering a position here, basically short the yen. Now, why? Well, because it's broken out. So the yen has broken out above 162. And the breakout above 162 means, in my opinion anyway, that it heads to 200. Now, there are legit fundamental reasons why the yen should continue to weaken up to 200. So that is a weakening of the yen in US dollar terms. And basically, the reason is the Japanese, their society is aging and dying. They are printing and borrowing a lot of money. And, they're trying to rearm while also, giving stuff to their population at the same time. And, those two things require, either economic growth or money printer go burr. And so the Japanese, since I think the big bubble burst in the Nikkei in the late 80s, and if we just take a look at that, the Nikkei is another thing that you could trade for sure. But if we just take a look at the Nikkei, so this doesn't go back, these data don't go back far enough. And I want to see if I can get more data. I need to go back to the 1980s. I wonder if I can, which data source is going to send me back here to the 1980s. Economic Nikkei, there we go. So just recently, the Japanese stock market, with the tech boom, the AI boom, exceeded the peak from the late 80s here. But since that big boom, this was a multi-decade. I mean, how many decades was this bear market? Until October 2012. My God. So we're talking about 2 decades of Japanese, equity bear after that amazing, parabola that was put into 1990. And it's just recently eclipsed that high from 1990. And so, the thing here for Japan is they have an aging population and money printer go burr. And so what that means is yields on Japanese paper have nowhere to go but up. So if we take a look at JP30Y, this is the yield on the long bond, the Japanese long bond. And this is a monthly chart. And I'm pretty sure that these data, go back to 2006, but I'm pretty sure that the long bond here, this is the highest yield ever that it's ever printed. And this candle on the monthly, this is starting to look like a bull hammer on the monthly. That's up. That means up. And so this trend to me, there's no reason why this trend should reverse. It should, in fact, continue. and it should accelerate because of what the Japanese are doing. Borrowing, so deficit spending, printing to pay off their population to keep them happy, and that means yields have to go up for Japanese bonds, and that means the yen has to weaken. So the trade here is short yen, long dollars. That's the trade. And this is a trade I've been waiting for months. And now that it's broken out, this is the monthly. Now that the yen is broken out above 162, that was my trigger to enter. And so I'm going to do that. I'm going to hop on over here. You see, the value of having an agent like Get Runway, to be able to talk to is just that I can talk to it about my trading ideas. So I want to be long JPY. So this is kind of counterintuitive here, because if I'm saying I want to be long this market, what I'm actually saying is I want to be short the yen. I think that I want to be long USD and short JPY. So I'm going to say breakout above 162 signals further upside, potentially to as high as 200. So that's my initial argument here. So this agent I designed to be something that you argue with. You've got to prove your case to the agent. You've got to make a case. Why do you think that this is a good trade? Why is this an interesting opportunity? And then what it's going to do is it's going to use the tools and skills that it has available to it. And it's going to analyze what you are telling it, and it's going to tell you what it thinks. And so you can actually see its reasoning. So it's going to start here with the multi-time frame analysis. This is the logic part that I'm going to be upgrading, and it runs through its reasoning. So it's going to say, okay, validating your thesis. It says it's focused on validating the proposed JPY breakout thesis. And now it's saying, okay, I'm taking a look at the multi-time frame analysis, yada, yada, yada. So it actually shows you its reasoning as it's calling the tools that I built for it. So it says, okay, that's a clear thesis. The technicals are strongly aligned with your view. Yes, they are. It says the multi-time frame analysis for JPY shows a bullish alignment across all time frames, 15-minute, 1 hour, 4 hour, 1 day, 1 week. And our pattern scanner sees a high confidence bullish setup with a score of 0.8. So it scores these opportunities from 0 to 100 or 0 to 1, and it gives you a confidence score. And so 0.8 is a very high confidence score from this multi-time frame logic. And so after it's done thinking, what it actually does is it gives you suggestions of follow-up questions to ask it. So that way you can basically just not need to type much in. You can just kind of recursively loop this agent here. So it says here it gave me a very, very high bullish setup score. Awesome. And then it says specifically there's a 15-minute inverse head and shoulders pattern that just broke out above 162.25. The RSIs are hot across the board with a daily extreme at 93. That's really hot, suggesting strong momentum, but also overbought conditions. So you see, here's the thing. If I think that the yen is going to depreciate to 200 over the next several years, how do you play that in the immediate term? Because the challenge is, if you're on hyperliquid, you've got carrying costs. So it says here, how does the hourly funding impact holding this position? So if I'm going to be long and the hourly funding is negative, that means that I am getting paid to hold a long position. That means I can potentially use no leverage and sit in a position for a long period of time, especially if I can hedge the funding rate risk using Boros. So I just asked it a question. How does the hourly funding impact holding this position? So this is, God, I gotta get it to understand funding properly. It doesn't fucking understand funding. So longs don't pay shorts when funding is negative. So when funding is negative, long shorts shorts pay longs. Shorts pay longs. It's got funding mixed up. And I have to go back and forth with it to get it to understand funding. Oh man, see, I've got to literally go through every piece of this logic to make sure that it's right, so that it's giving me good stuff. And look at that, it says, you're absolutely right. My apologies. Thank you for the correction. I have that backwards. Yeah, you do. That's a mistake that I see it make consistently. I've got to fix that. So basically, I'm going to get paid 13% APR to hold that position. So I'm earning this is called a positive carry. And then if I hedge this funding rate, because this can flip against me, if I hedge this funding rate using Boros, like if I enter this position, short the yen, long dollars, short yen over on Hyperliquid, I think I might be able to hedge my funding rate risk using Boros. Let me see if there is a market to do that, because if there is, then all of a sudden this becomes a really, really exciting opportunity, I think. So I want to go ahead and I want to hedge my funding rates. Absolutely. And I want to, let's see here. I'm just waiting for opportunities here. I'm just going to go to markets. And from markets, we're taking a look not at Bitcoin, but I need Forex. So JPY, yeah, no results available. So I'm not going to be able to hedge my funding rate risk yet using Boros, because there's no market for me to be able to do that. Now they've been adding more and more markets here. It seems like every month or every couple of weeks, they're adding more markets to this extremely useful interest rate swap app, Boros, but no USD JPY market, not yet. So I'll continue waiting for that. In the meantime, what I can do here is I can keep talking through my position. So let's say, it wants me to define the trade structure. So it's asking me some questions, right? What's your planned entry? What's your stop loss? What's your take profit level? Well, I probably want to enter at, maybe, do I want to enter at the market? Yeah, so I'll enter at the market. Let's just say enter at the market. So what I'm starting to find is that your entry, if you're just trading, like this is not long-term investing. If I'm just trading, then my entry, I think, matters less than my risk management. I think that risk management is more important than entry if I'm just trying to, trade directionally, or trade a spread. I think that, not for the spread, but definitely directionally. I think that the risk management is necessarily more important than the entry. So it's running through reasoning now. And you see over here the trade ticket. So as I go through with the agent, it's going to allow me to complete the trade ticket. And once I have the trade ticket complete, that becomes an entry in my journal. And so you cannot trade without a journal entry. You must complete a journal entry to be able to unlock the autopilot that allows you to execute a trade. So it's saying, okay, great. So market entry it is. Awesome. The current price is 162.52. This is, I'm going to be long JPY, which actually means I'm short the yen. Okay, great. So what's your stop and what's your TP? Well, this is where I want it to suggest this for me. So I'm going to say suggest a stop and a TP for a JPY long at 162.52. So I say, I just hit that button, suggest the stop, because I already have it to where it's going to suggest to me next prompts to ask it. So, I start off with a trade idea, and then it runs the multi-time frame analysis, and then it's going to, run me through the risk management process. And that's exactly what I'm doing here. So it says, based on the current volatility and your preference for using the 4-hour ATR, here's a disciplined approach. Stop loss, the 4-hour ATR. So ATR is average true range. So based on the volatility of the asset, that gives you the average true range over specific periods of time. And so the ATR over a 1-hour period of time is going to be different than the ATR for 4 hours or for a day. Okay, so stop loss. The 4-hour ATR is 0.24. A stop at 1.5x the 4-hour ATR would be a value below my end. So this would place my stop below the recent breakout structure, giving my trade room to breathe. Great, right? And then my TP. A 2-to-1 risk-reward ratio is a solid target for a momentum trade. This would place your take profit at 163.26. This gives you a clear risk-defined structure. See that? Super valuable right here, because most traders are not going to do this. They're not going to run through this process on their own. They're just going to say like, oh, number go up, buy. Number go down, sell. Buy, sell, buy. It's like, it's emotional, right? It's a hell of a lot more like gambling than it is like disciplined trading. So the whole point of this app is to allow you to have a co-pilot to talk to that will not let you trade unless, number one, you make your case, and number two, you have clear, defined risk management structure. You can't trade without the risk management. So this gives you a clear risk-defined structure. And then it says, how do those levels feel? We can adjust them, but this provides a concrete starting point based on the asset's recent behavior. Awesome. Okay, so now I've got these different things that I can ask it. And now I'm going to say, okay, help me journal the trade. I like the trade. I came up with the idea. I've been waiting for this trade for months, finally got the entry above 162, and now I structured a trade. So now I'm going to journal the trade. And once the trade is journaled, then I can enter the trade using the app. So using Get Runway. Now, I think that it started giving me a weird error this morning. It worked on my first entry. And then I think Hyperliquid started, I think there's something, rejecting the trades on Hyperliquid, or at least it was doing that this morning. So it's going to be really interesting to see if I will be able to successfully enter this trade from the GetRunway.trade app on this. I want to trade the yen here. And then I want to bring it back on over to some news and just see what's going on in the cryptoverse. Okay, so I've got my risk reward. Now it's saying sizing and risk. How much collateral do you want to commit to this trade? What leverage do you want to use? What's your win probability? Okay, so I want to commit, let's just say, I don't know. I want to commit $500 of margin to this trade. And okay, I'm just going to say I want to risk. How about this is pretty high conviction for me. I've been waiting for this for a long time. So I'm going to say I want to risk 1.5%. That's a high conviction amount. 1.5. I want to risk 1.5% of my available margin to this trade, and I want to use 1x leverage. Send. Okay, great. So what I'm going to get in a second here is, I think a pretty decent trade setup. So I want to hop on over here into Hyperliquid just real quick and find the USD JPY, that JPY market. Now, I'm pretty sure that this is actually one of those XYZ markets. I think that's what it is. So I just want to make sure, yeah, it is. USD JPY, USDC. Yep, there we go. Got it. So now I'm taking a look at the market, and for whatever reason, I've got to fix it, but I think that it kind of fucks up when it's entering on its own in terms of like the amount of leverage that it uses. So I just, on my other screen, I hopped on over here to the correct market, the yen market on Hyperliquid, and I set the leverage there on my trading account to 1x. And I think that that's going to make it so that it's not going to, over here on Get Runway, I think it's not going to mess up that way. And it's taking, quite a while to to respond to me here. So I think that, there we go. Excellent. Let's formalize it. So 1.5% of my 2,000 bucks in available margin comes out to $31, 1x leverage. This is it's saying this is exactly the right way to think about it. Defining risk in dollars before committing. Awesome. Now let's run through this. Now let's run this through the risk engine. Okay. One last thing. What's your estimated win probability? So it says that my win rate on journal trades is 40%. Should we use that or as a baseline, or do you feel more or less confident about this particular setup? Well, I know that my long-term win rate is 52%, just based on tracking my own trades in GMX over the last couple of years. And the reason why my win rate here is 40% on my journal trades is because I was entering and exiting a lot of trades quickly to test this software to make sure it worked and to find bugs. So I was going in really, really small, risking very, very little, just so that I could not worry about the dollar amount, so I could find the bugs. So I've got an artificially low win rate here. And so what I want to do is I want to say win rate, my long-term win rate is 52%. And so what that's going to do is it's going to help me, it's going to calculate the expected value on the trade. So EV, expected value, super important. So what I've done here is I've defined, see the trade ticket over here? So the trade ticket, I've got the entry zone. I know my entry. I've got my stop. I've got my TP. That's my target. I've got the position or trade size. I've got my leverage, 1x leverage. I've got my win probability, 52%. And that's going to generate my expected value on the trade. And then I've got my R. That's how much I'm risking on the trade, my 1R. So once I've got all of these parameters set, then I can trade, but not before. So, usually when people are taking a look at markets on Hyperliquid, they're going to be like, oh, this looks good. And, I kind of feel like, this asset goes up, or I think that this asset goes down. That's not trading. That's just gambling. If you just feel or think that something's going to go in one direction or the other, that's just gambling, because you don't know anything. I don't know anything. I know nothing about the direction. All I can do is clearly define my risk. That's the only thing that I can do to give me some type of an edge when I'm trading directionally. If I clearly define my risk and I know my win rate, and I let my winners run and I cut my losers because I use stops, and I've got a positive expected value, then over time, that should result in consistent profits. So that's the idea here with the directional trader. I think the spread trader is going to be much, much more profitable because I'll be able to completely remove myself and it'll be completely algorithmic. Okay, and so I need to also fix it. Now it's talking about using 6x leverage. Like, what the fuck? No, I want to stick to 1x leverage, and I want to accept the much, much lower risk. So I want to stick to 1x leverage and accept the smaller risk. That's what I want to do. Yeah, right here. So I've got it as a suggestion. I'll stick to 1x. There we go, 1x leverage. So it's giving me a positive expected value for this trade, which is what I expected that it would say. It's giving me a suggested trade size, the Kelly adjusted, 1% of your capital, got it, leverage required. So it's just running through it's finalizing the trade plan. Awesome. Okay, so trade size, leverage, win probability, expected value. There's my R. Awesome. So my entry zone 162.52, my stop 162.15, my TP 163.26. Perfect. I like. It's very nice. Okay. And here's the final trade summary. So now I'm just going to hop into the journal entry. I'm going to take a look at the journal entry here. And let's see here, just waiting for the journal entry to load. And then once the journal entry loads, I'll be able to enter this. So here's my thesis. Check it out, right? Capitalizing on bullish breakout in the yen above 162, supported by strong multi-time frame alignment, a 15-minute inverse head and shoulders pattern, and favorable positive carry. That's favorable funding. Great. And this is Hermes position. So this is the agent. It's going to tell me what it thinks. It says the plan is technically sound, has a clear invalidation level, and uses disciplined risk management. The trader is consciously choosing to under-risk relative to their 1.5% rule in favor of their 1x leverage preference, which is a safe and acceptable decision. Great, awesome. It says JPY long breakout momentum trade, and it gives me a verdict on the trade. Does it endorse it? Does it caution against the trade? Or does it dissent against the trade? Here, the verdict is endorsed. It says the plan is built on a clear, a strong technical thesis, clear risk parameters, disciplined leverage management. The trader is consciously prioritizing low leverage over their standard percentage risk rule. Love it. So I want to go ahead and execute on Hyperliquid. So I click the execute on Hyperliquid button. Before I do though, I'm going to hop into settings, and I just want to make sure that if I go to directional, am I getting any, there we go, I hit resume. Resume should clear the blocks so that it's not going to, hopefully it won't get rejected again. I might have to go in and fix that. So here's my journal, right? So I call it the ledger. This is your trading journal. You can't execute a trade without running through your journal and creating a journal entry. So here's that journal entry for the trade that we just created on the yen. I'm going to click execute on Hyperliquid, and here we go. Now I can execute on the mainnet. So I'm going to authorize Runway's agent. I'm going to accept the protocol builder fee, and I want to see if it can use a market entry. And I wanted to attach the stop and target bracket. So here we go. Execute entry. And I'm going to just open up Hyperliquid on my other screen so that I can see if it works or not. Okay, so checking plan and policy, setting leverage, signing with the turnkey agent, submitting to Hyperliquid. Let's see if this works. Submitting to Hyperliquid, order rejected. Okay, so I don't know why the orders keep getting rejected. The first order this morning filled, and then the all other orders since then have gotten rejected. So I'm going to have to go in and figure out why it's getting rejected and fix whatever the bug is. So what I can do in the meantime, though, is I can just use my journal entry, and these are all the data that I need to be able to enter. So I've got my journal entry right here. I'm just going to enter this manually on Hyperliquid. So I want to buy, and the trade size, the margin amount, 2098. So I'm going to go in 2098, and let's see here, balances, awesome, positions. You know what? I'm going to cut the position sizing. I'm going to go in with 1898, and my TP, the TP is my target, 163.26. TP 163.26. Okay, and my stop is right here, 162.15. So my stop is 162.15. Okay, great. So I've clearly defined my risk and defined my reward. I've got a 2-to-1 risk to reward ratio, and my risk is $4.78. Awesome. See, clearly defined. Awesome. And I've got a positive EV. So now what I can do is I can go ahead and enter this trade. So I'm going to go ahead and enter this. And I wonder why it's saying transfer to perps. ISO, this is it really that why are my balances? Okay, so it's in the perps market already. So I wonder why in this isolated market here, it's saying transfer to perps. That's so strange. Okay, 1898, and the TP is, I'm just going to try this anyway. The TP is the target 163.26. The stop 162.15. And let's see if it'll allow me to do this. So I'm already in perps. Am I in the right wallet? I might be in the wrong wallet. Is that, no, I'm in the right wallet. Okay, so why is it saying transfer to perps? Because it's already in perps. So isolated, cross, confirm, and not allowed for this market. So I don't have a ton of experience trading on Hyperliquid. I used to trade. Oh, does it require that I have perps overview, spot perps? Oh, do I need assets in spot to be able to trade here? Is that what it's telling me? No. Okay. Well, it's not making sense. I'm definitely going to figure this out later. But I don't have a ton of experience trading on Hyperliquid. I'm mostly familiar with GMX, and Hyperliquid's a little bit of a different beast. But I'm going to figure out why it's telling me to transfer to perps when I've already got assets in perps. So, kind of interesting there. And I'm looking at my balances. So I've got available. I've got a couple $1,000 in here that's available to trade in the perps account. So yeah, just kind of funny that it's not working for me there. But I'm definitely going to make that work. Now, another thing that's really cool about the GetRunway.trade agent here is that it actually sends me alerts on Telegram to tell me when to scale in to a trade, or when to trail a stop, or when to exit early, because it's always watching open positions for me. So it sends me notifications in Telegram, and because Bitcoin is down today and I'm short, I'm obviously making money, right? So it's telling me that hey, you might want to take your profits or start scaling out, which is great. I love that. Okay, let's take a look at some news items here. Let's hop on in here to X, and let's just see what's doing. So on X, what do we got when it comes to Japanese yen stuff? So it says Japan may be forced to spend $100 billion to save the yen. Yeah, they can't save the yen. It's impossible. So the yen's going to inflate. It's going to lose value against a basket of other currencies. The dollar being one of the primary trading partners here. So the yen is going to inflate away, and if the Japanese government, the Bank of Japan, decides that they want to spend whatever it takes to save the yen, they're going to likely end up either selling U.S. Treasuries, which would push yields up, in the Treasury market, or they're going to have to borrow, to do it, which is just going to put more upward pressure on the yen, depreciation of the yen. So yeah, this is the trade that I was talking about months ago, and now that it's finally broken out, this thing looks like it's really going to run. I got to figure out why why Hyperliquid is telling me to transfer to perps. I really want to enter that trade. Why is it telling me to transfer to perps when I've got margin in my perps account? What am I missing? What am I missing here? So it says perps, available balance, ignoring open orders. Okay, open orders. Maybe that's why? No. Those open orders that I've got, those are, those are to close positions. Those are not to open positions. So there's no collateral or margin like allocated to that. So okay, what am I missing here? How do I make this work? Why is this not working? So market type. Okay, positions, balances. So it says balances 2, but I've only got the 1 balance in the perps account. So why is it saying balances 2? available balance, total balance, send, transfer to spot. I want to be able to trade that XYZ market. Why is it not allowing me to trade that XYZ market? So positions, open orders, trade history. Okay, account type. Only all DEXs have separate balances, and cross margin applies separately within each DEX. Oh, because I set my account. Got it. I set it to manual. So because I set the account type to manual, every type of market on Hyperliquid has a separate available margin balance. So that means that that's probably why it's getting rejected. I see now. Okay. So what I should really do is I should use the portfolio margin rather than manual, or upgrade my agent so that it knows. I get it. Okay, I got it. So now that I get it, I know how to fix it. I gotta close the trades, take the profits, and then change the account type on Hyperliquid from manual to portfolio margin. And then I should, but I don't want to change it to portfolio margin because I want it to be able to, I want the spread trader to work. So what I got to do is I got to fix the logic in the app so that it knows how to move available margin into a specific DEX market programmatically so that I can then open trades. Got it. Okay, that's what I'll do. Cool. It's good talking through that stuff. All right. So yeah, the Bank of Japan doesn't have any choice but to let the yen inflate away. They've got no choice here. So the yen is definitely done for. You know, you talk about toilet paper currencies. That's the yen right there. So let's see here. Let's go through some news items. You know, not familiar with this account. Whale holdings for Bitcoin just put in the largest spike in history. Yeah, well, I mean, you know, you got to take into account these, you know. So I wonder what, yeah, is it just ETFs? Whales have accumulated 270,000 BTC in the 59K area. Yeah, I mean, there's definitely a great case to be made for buying Bitcoin right now. You know, there's no doubt about it. Even with Bitcoin's problems, I think that it will overcome them. Everyone is expecting 40K. I'm not. I expect 50. I think 50K on the downside makes sense. You know, simply because every time the Bank of Japan has raised rates in the last couple of years, it's led to like a 20% decline for Bitcoin, and you know, a greater than that percentage decline for other digital assets. So I'm thinking that this is like the final shakeout this summer. If Bitcoin breaks below, you know, the lows from a couple of days ago, if it really breaks below those lows, then I think it goes to 50, and I think that's the low for the summer. And then you know, we bounce into July and chop into October. That's what I think is going to happen here. And you know, there's more and more metrics that are starting to flash that tell me that the bottom's almost in. So this is just one of them. You know, accumulators, whale wallets, you know, accumulating Bitcoin. That's exactly what you want to see, you know, to mark some type of a bottom. But another thing that you really want to see is volume. You want to see like massive trading volume. And, you know, that would be a sign of accumulation. And I don't think that we're seeing that, you know, but we're just not seeing that. So if I just take a look over here at TradingView and, you know, throw down volume, now these are Binance data, but you see the volume down there? That is the volume from the last bear market. And basically after the final dump, you know, into the summer of 2022, after that big dump below the 200-week moving average, that was when volume started to tick massively up. Now, these are Binance data, so it's going to differ depending on what exchange you're looking at. If you're looking at Coinbase, you're going to see different volume. Here we are, just broke down below the 200-week moving average for Bitcoin. Let me go ahead and get this out of the way so we can see this a little bit more clearly here. So you see, Now that we broke down below that 200-week moving average, I think that we're making the final descent, this bear. And so I think that we head to 49K. I think that's the level of support. And what I think we should be waiting for is, a big spike in volume. That would tell us that there's actual, accumulation going on. But it seems as though there's also a signal over here where, whale holders are buying up Bitcoin. So definitely that's a valuable signal. Now, here's something. Number one, if this is crypto India, like, fuck India. Like, I don't want anything to do with those Indian scammers. So, and, here's a red flag here. They're all the big names, Visa, MasterCard, Google, BlackRock, yada, 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 blah, blah, blah. They're talking about a new stablecoin built for global payments, launching OpenUSD. Give me a break. This is another central bank digital currency. If it's backed by these names, this is a CBDC. And also, this is coming from a channel named Crypto India. So, like, you got a likely scammer talking about, a CBDC. I'm going to pass on this bullshit. Okay, hyper markets. Let's see, what is this? Oh, you know what? So it's saying hyperliquid market intelligence. I bookmarked this. So this is interesting to me. So something that has proven to be valuable over time is following wallets that generate returns. That could be something that I could build into the app, just like a basic copy trader. Just basically copy the guys that are making money consistently. Copy those wallets. This is Edge. I gotta build that in. I'm gonna grab my notebook here and take a note on that, because I like the directional trader. I happen to enjoy going back and forth with it. I think that the stat arb logic will consistently generate an edge, and I think that this generates edge too. So what I want to do here is copy trader logic, and then what's the name of this website here? Hypemarkets.hl. What is .hl? That's a cool, I'm going to follow this one. That's a pretty cool, is that a website? That's got to be a website. No, .hl. Maybe this is kind of like ENS, where you could get .eth names. .hl might be, a hyperliquid version of that. AP Northeast 1. Is that a fucking that's got to be like an AWS server, right? Or maybe G Cloud. Let's take a look at this. Hype markets. So let's see here. Oh man, I've got a VPN turned on and it's still not letting me use this. That's fucked up. What the hell, man? I need a better VPN. Hype markets. Let's see. So markets. I don't want markets. I want the wallets. There we go. I want the wallets, and I want wallets, and I want to take a look at realized P&L. Let's just sort by realized P&L and realized P&L, and I want a lot of trades. And this one's only trading. What is this trade? What is this wallet trading? It says one coin, and it's only trading what? Orders, activity. Is this not going to load for me? So activity, it's taking forever to load. But this is really interesting, being able to just follow wallets that consistently make money and just basically copy their trades. That's a pretty good idea. So copy trader logic, and it's called hypemarkets.xyz. Hypemarkets.xyz. Copy trader logic. Okay, great. I will go ahead and check that out later on today. All right. In the meantime, let's hop on over here and let's check this out. So enough of hype markets. I want to continue. Let's just move on here. Introducing the new tokens page on DeFi Llama. DeFi Llama is an excellent tool. Great tool. Major financial firms, launching a joint crypto stablecoin called OUSD. See, you got to be careful of these stables because these things are CBDCs. That's what these things are. These are not sovereign. Okay, like if you hold USDC, USDT, OUSD, the shit can be frozen. You're going to get reported on. It's surveilled. It's not sovereign at all. So, people are bullish on stuff like this. I'm not. How does these firms, launching this coin, how does this make number go up for Bitcoin? How does this make number go up for ETH? Why would number go up for, Sol or Sui or Tau or any of them, any of those coins? Why would any of those coins number go up based on this news? And why is this news good? Why is, a payment stable coin, central bank digital currency in disguise? Why is that a good thing for, us, for me and you? I don't think it is. I think that this is just, these major firms upgrading I think it's them upgrading their infrastructure. Long overdue. Just simply upgrading to digital rails is not a reason to be bullish. I think that, you're bullish because there's more adoption over time. And so more adoption requires more users. And if people are using this, but they're using it through Visa, MasterCard, BlackRock, Coinbase, or Amex, then what those big firms do is they're abstracting away, like actually using a chain. So does that mean user growth for ETH, a public blockchain? I have no idea. Maybe. If this means user growth for a public blockchain, then I'm bullish on it. If it does not, then my instant gut reaction is I dislike stuff like this. Okay, and then you got the EU's MiCA deadline. So man, you talk about a piece of shit. MiCA is a piece of shit, and those Europeans. Well, you know what? Let me be clear here. I think that the bottom line for MiCA is it's the EU. It's not the European people. Although, you know what? If you got white European people, Westerners who are voting for those pieces of shit in the EU, then, I mean, fucking A, man. Like, at a certain point, it's like, you got to vote with your feet. They got to get the hell out. And those who can't, like, the Crusades were fucking justified, man. And they're fucked. They're totally fucked because they've got a communist dictatorship in the European Union. A communist, maybe not dictatorship, but like authoritarian regime in the European Union. That's what the European Union is. Like, you see people, die. There's like 70,000 excess deaths a year in the European Union, like from heat stroke, from like heat, because they're not allowed to use air conditioning? Are you fucking kidding me? Like, what the hell are they even talking about? Have you guys seen the memes? People in, like, we're talking, China is a fucking third world shithole country. And you got Chinese people installing like air conditioners for their fucking pigs just to troll the Europeans. It's so sad because you got this EU government, just an authoritarian communist regime that rules over the entirety of a large economic bloc of Western people. And they're communist. And so that means they stifle entrepreneurship and business, and they want to steal all of your wealth. That's what communism is. That's what they do. It's only ever resulted in mass murder. And so it makes sense that the communists, because they always do throughout history, the left partners with Islam, Islam gets a foothold, and then the Muslims slaughter the leftists. Like, we've seen this play out over and over again. And that's what's starting to play out in Europe. Unless the Europeans, number one, like, they've got to have tribunals for those European Union autocrats. They've literally got to string them up. And number two, they've got to fucking go around with the army and deport the millions of Muslims and Africans that they imported, that the communists imported. And those people who voted for this shit, those people who on X are like self-righteously going out, shooting videos of themselves saying, I'm not using air conditioning because of the climate. Number one, you're a fucking retard if you do something like that and you say something like that. And number two, there are more excess deaths in Europe each year due to heat than there are gun deaths in the United States each year. So the European, propaganda about America is complete bullshit. And, you can see that with just how much the European soccer fans who came out here and the Japanese soccer fans who came out here to the United States and are still here for the World Cup, just how much they love it here in America, because we've got air conditioning and guns, and we've got power and fuel and energy, and we've got entrepreneurship and freedom. It's like, everything that Europeans, Western Europeans, and Japanese, Western Japanese, it's everything that they want that they don't have. I think that the Japanese have it more than the Europeans, but the Japanese were importing Africans and Muslims too. Like, what the fuck? That's retarded. So, here we go. MiCA, MiCA's deadline. So 244 crypto firms are authorized across the European Economic Area, with OKX leading. So OKX is, it's a tier 1 exchange. And, and then also you got Kraken and Coinbase. They've got MiCA licenses. What is a MiCA license? MiCA is just, it's a framework for surveilling and reporting on what you own, when you bought it, how much you made on it, so that they can tax and steal. That's all MiCA is. That's what the EU's MiCA is. And that's what we're going to get with this fucking Clarity Act. We've already gotten it with this Genius Act bullshit. And then we're going to get it with Clarity. And so when people are bullish on Genius and Clarity in the United States, I am not at all. I think that crypto, Bitcoin, doesn't need any of that shit to thrive. In fact, it's a parallel financial system. And so it's supposed to exist outside of this legislation. And you can't legislate rules into code. In crypto and DeFi, code is law. And so fuck the EU and MiCA, fuck the Genius Act, and fuck the Clarity Act. Like, these things are not good. And, Crispy, I see what you're saying with, the Crux episode. Yeah, man, the layer 1 payment coins are bullshit. Like the whole idea that, for KETA, for example, or literally any of them, but, KETA, like, there's no there, okay? And what dude was saying the other day was, well, I'm bullish because speculation is value. Speculation is not value. And, being bullish because, Eric Schmidt did this or did that, that is not a good reason to be bullish. Like, Eric Schmidt's a piece of shit, dude. Like, since when are all of a sudden, people like happy with Google? Like, wasn't Google's what's their tagline or catchphrase? Wasn't it "Don't be evil"? I'm pretty sure Google is pretty dystopian and fucking evil. I mean, all the censorship that they did on every, platform that they own, during COVID. Remember the COVID censorship on YouTube? Remember that shit? Yeah, fuck Google. And fuck Eric Schmidt, that fat piece of shit. And, dude, so Eric Schmidt investing $20 million in KETA, that is not a reason to buy KTA. If you buy KTA because some fucking douchebag, put in $20 million, which for him is a tiny amount of money. If you're a billionaire, so $20 million is to $1 billion as $20 is to $1,000, okay? So just think about how small that is. If you've got $1,000 and you spend $20 of it, that's the same thing as a billionaire spending $20 million. It's nothing. That's for $1 billion. Dude's got fucking like $100 billion. So it's like, imagine if you got 100K cash and you spend $20. You don't even notice. So for him to spend $20 million to invest in KETA, in the tech, it's meaningless to him. And he probably didn't even realize it. It's probably done for him. You know what I mean? Like, so it's just so stupid when I hear people say like, oh, well, fucking insert name of institution here, but invested in this thing. So I'm going to buy it. That's not a good reason, man. What the hell are you talking about? And so, Crispy, what you got going on here, man? Yeah, so the Crux episode, so basically what that dude told us after the fact was that, like, you can either make content that talks good about projects and gets views, or you can be authentic and not get views. And dude, I don't give a fuck. Like, all I want is to find truth. And I will never make content and talk good about bullshit projects for views. Never. I will never do that. So yeah, dude. And let's see here. Europeans did do it to themselves. This MiCA bullshit, man, totally fucked. And I was talking to a Canadian last night, just at a bar, talking to him and his wife at 2:00 in the morning at a bar, and dude's telling me about, the taxation in Canada. And I was just thinking to myself, ugh, that's horrible, man. Yeah. So let's move on from MiCA. I can't stand the communist bullshit. I really can't. In the United States, our country was founded, it's the 250th anniversary this year. Our country was founded because of taxation without representation on a 2% tax on tea. And now you got these piece of shit Democrat politicians and Republicans too, talking about, pay your fair share. It's like, motherfucker, how about you go fuck yourself with your fair share bullshit? It's a bunch of crap. So yeah, I am not a fan of any of that shit. Okay, Open Standard, Open USD. The name is an antonym for what it actually is. There is no open with a stable coin that is built with those big, giant institutions. Yeah, man. So OpenUSD is not open. It's kind of like OpenAI. It's closed. So let's see here. The S&P, yeah. So the S&P ripping. I like Crypto Rover. He puts out really good content. And, yeah, is this .com bubble territory? Sure is. Absolutely is. And I think that this is valid. Will there be some type of reckoning here pretty soon? I do think so. If we're talking about the AI trade, because I mean, look, the AI trade is. Has anyone here ever mined crypto before? Have you ever bought, crypto miners like ASICs, or did you ever buy GPUs to mine ETH or some other shit coin back in the day? If you did, you'll know that it's kind of difficult to be profitable buying those things. And so basically what all these hyperscalers have done is they're spending all of their cash flow to build giant AI inference data centers. And they've got to buy like super overpriced chips from the chip makers to be able to do that. And they're just inflating away everything. So yeah, I don't see how it works out well in the short term, like the next year. But I think that get through the crash, and I think that this AI it's so powerful. Like what you can build with it is so amazing that I think give it 2 years, and I think everything's much, much higher than it is today. But there's got to be some type of reining in of this spending. Yeah. Yeah, Mara, aren't they? They're like, switching from Bitcoin mining to AI inference, right? I think so. X Money. This looks interesting. I might take a look at X Money. 70% chance Bitcoin falls below 50K, according to Kalshi traders. Yeah, I don't think so. I think the 49K is the low. And the reason why I think the 49K is going to be the low for Bitcoin this year is volatility is compressed. So since Bitcoin's volatility is compressed, you should expect a shallower drawdown trough because we have a lower level of vol. that means smaller expected move. That's probably why we didn't get the parabola on the upside. So Japan's retail margin debt hitting a fresh high doesn't surprise me. It's probably same thing in Korea too. Anthony Pompliano, there's something about this guy that I just don't like. I can't tell exactly what it is, but I've noticed that in my life, if I get a gut feeling about someone, I'm gonna go with it, man. I can't tell why I don't like this guy, but I don't like this guy. And he's saying, I don't know. I don't know. There's just something there that I dislike. I can't put my finger on it, but something. Oh man, this guy's great. Tom Dorr, whoever this account is, he puts out the coolest posts about like amazing GitHub repos. So penetration testing is something that I'm going to have to do to my app at some point here. Spark, yeah. So this is just, this used to be a DeFi protocol. And now this is like a TradFi, wrapped up in DeFi clothing. Or TradFi wrapped up in DeFi. Yeah, that's what it is. Oh my God, look at Sailor. Oh, there's our little investor. Why don't you come down here and tell us how many Bitcoins you have? So Sailor, I think Sailor is going to be just fine. I think that MicroStrategy and Stretch are going to be just fine. I think that, is it a Ponzi? Yeah, it is for sure. But I don't think that it blows up, though. You take a look at Stretch at 83. I mean, this is really, really shitty for anyone who bought it at par. If you bought it at 100, and the way that Sailor marketed it was that it was like this risk-free thing. It was never a risk-free thing. This was always a Ponzi scheme built on top of a Bitcoin pile that MicroStrategy holds. And MicroStrategy looks like dog shit. I think it goes to 50. Just because I think Bitcoin puts in its final move to the downside here. And, this summer. And then, that's the buying opportunity. So MicroStrategy or strategy is levered Bitcoin. This is a really bearish head and shoulders pattern. We've broken below the neckline here at 100. And I think that it goes to 50. I think that Stretch, I think that he'll probably have to sell Bitcoin to raise cash to make people feel better about Stretch to get this thing back to par. But this is for sure a Ponzi, and he's going to have some litigation to deal with. That's for sure. Do I think it goes to zero, though? No. And do I think strategy goes to zero? No. I think that Bitcoin is much, much too valuable, and he's got a ton of Bitcoin. So I think MSTR and Stretch are going to be okay in the long run, but I think that there's probably more pain ahead for both. So that's going to suck. And so, yeah, I see these memes all over the place now on X. People, poking fun at Sailor. And then you got people like that douchebag fucking Schiff, Peter Schiff, the gold bug guy. He's just a gold bug. And so he's basically just talking all the shitty shits about Michael Saylor right now. Fucking Peter Schiff douchebag. So let's see, AI XBT. So you got to be careful of this AI XBT agent, because the thing with AI XBT is it's a bot. And so that means that sometimes it can, basically pull in a ton of data points and create a great post. And sometimes it can pull in a ton of data points that are bullshit and create a bullshit post that looks super convincing. So you always got to take this with a grain of salt here over taking a look at the AI XBT agent. But, Pump Fun is Solana's, best protocol. Think about how pathetic that is. The best protocol on Solana that actually generates money is a meme coin scam casino. What the fuck? Really? That's the best you got, Solana? That's why I can't be bullish on Solana until it gets down to $30 or something. I'll buy it down there. But it's so hard to be bullish on Solana, because when you take a look, if I hop on over here to DeFi Llama and I look at chains, and then I scroll down, Solana is number 2 in DeFi TVL with a paltry $4.82 billion, which is, just a small amount greater than, the base chain, which, for whatever reason went down twice because of one sequencer failing. And then you got the Hyperliquid layer 1 here with 1.4 billion. Hyperliquid is just an app, a dApp, so this is going to overtake Solana and DeFi TVL pretty soon. So we take a look at Solana DeFi TVL, and, I think that this has quite a bit further to fall here. And so if we scroll down here, what protocols actually generate revenue here? What protocols make money for this thing? Let's go ahead and take a look at revenue. Let's sort by revenue. Look at that shit. You got, oh my God, Collector Crypt. The fuck is that? Oh, isn't that the one where you can buy and sell like trading cards or something? But Pump Fund by far, like Jupiter over the last 7 days made $1.23 million. But that fee mechanism for those revenues to flow to the JUP token holders, I'm pretty sure we ran through some deep dive research on that recently. Might be worth revisiting, but I didn't think that the fee, the value accrual mechanism for the JUP token was all that strong. But I think it might actually be kind of a Fugazi one, where like don't they keep all the money for themselves, or like there's a really crappy value accrual mechanism for Jupe, but they make money. Jupiter's making $1 million a week. I don't know what Axiom is. I got to take a look at that. And then look at the top protocols, though. It's Pump Fund. This is on Solana, okay? This is why I don't really like Solana, or one of the reasons. There's several why I don't really like Solana, several reasons. Tokenomics are shit. Inflation adjusted, it didn't put it in a fresh all-time high. So, and then the best products on the Solana chain are, meme coin and trading card protocols. Like, memes are scams, okay? That's what they are. And like Collector Crypt, what even is this? A protocol to sell Pokemon cards? Jesus Christ, dude. Like, this is ridiculous. This is why people call crypto a scam. Because like on Solana, one of the top chains, in fact, this is the number 2 smart contract chain, Solana is. On the number 2 smart contract chain, the number 1 protocol on that chain is a scam coin generator. Like, you got to be kidding me, right? And then the number 2 protocol on Solana in terms of revenue, right, that actually makes money is a Pokemon card trading site. I got to check this out. I haven't seen this one yet. I've seen posts about it, Collector Crypt, but I've never actually seen it. And so I've got to check this out. I've got some fucking Pokemon cards like in my parents' garage. Should sell this stupid shit while you still can. I mean, how fucking stupid do you have to be to spend money like this on Pokemon cards? Like, you got to be a complete faggot. Like, really? I mean, come on, man. Fucking, who's spending $3,000 on a Pokemon card, dude? Like, ugh, this is so gay. So fucking gay, dude. All right, well, how do I sell my Pokemans? How do I sell these pieces of shit? I've really got to sell them. Probably got some dumbass Pokemon cards that are worth some money. But you see, here's the thing. When I was collecting Pokemon cards, I was 10 or 8 or something, or 7. I was a child. Like, now I'm a grown-ass man, and this is like, okay, like, I guess some people collect cars, others collect watches, some collect Pokemon cards. I mean, all right. Well, it's just the difference is like, if you collect cars or watches or guns, that's like man shit. That's cool. If you collect Pokemon cards, that's faggot shit. That's gay as fuck. Come on, man. Come on, my guy. This shit's gay, dude. Ugh. It's fucking gross that people spend money like this on these. And like, what do you do with them? Do you like look at them, or do you like put them up on your wall, or like do people play these games with them? Like, this game was always kind of gay. Like, this is for kids. Oh, dude. You know, I think that the linoleic acid, I think that, you know, the fucking seed oils, I think that shit, because it's in everything and you really have to be diligent with what you eat to avoid it. I think that plus glyphosate being sprayed on everything, plus the vaccines, you know, I think that since the 80s, I think testosterone levels for males in the Western world has plummeted. And it's because of those things: glyphosate, fucking seed oils, and vaccines. I think that those three things have cratered testosterone. And that's why, you know, most of the time when I'm listening to someone like on YouTube, scrolling through videos, right, looking for something, everyone sounds like this. Hi guys, let's talk. They sound so fucking gay. And they might not be gay, but they've got super low test, and that makes your voice sound gay. And so I think that's probably why people like this faggot shit. Ugh, gross. I gotta sell my fucking Pokemans. Ugh, all right, well, collector crypt, I mean, dude, this shit makes money. This makes money on Solana. Like, this protocol makes a lot of money. Aerodrome could learn a thing or two from this. Aerodrome's such a bullshit protocol. It really is. I feel bad for Mike. I don't think there's any value there at all in that Aero token. Like, the more that I think about it, I don't think there's anything there. And then, you know, Solana's basically like, they've got Jupiter, which is a DEX for you to trade scam coins on. They've got Pump Fund, which is a protocol for you to launch scam coins. And they've got Collector Crypt, which is a protocol for you to sell your faggy Pokemon cards. Like, that's what you got going on in Solana, man. Like, so it totally makes sense when I'm talking to random people at a bar for them to, you know, tell me like, hey, crypto is super scammy. Well, yeah, because it is super scammy. It is. Like, if your top protocols on the number 2 DeFi chain are scam shit, then like, yeah, it's going to make sense that people are going to call it a scam. So I'm going to bring it back on over here to X. Pump Fund makes a lot of money, though. I don't think that the revenues flow back to the Pump token, though. I don't think that they do. So, you know, I want to take a look over here at, let's just take a look at the token, because I do not think that those revenues make it back to the token holders at all. If I take a look at Pump Fund, I'm going to go to crypto, Pump Fund, Pump USDC. This is, I think it's just Pump, right? There's got to be a token. There's got to be a token for this thing. Is this the Pump token? Yeah, I think this is. Wow. Down and to the right. You talk of, and again, see, just another example of scam tokenomics here. Because, and the way that I know is this thing's going down and to the right while the protocol is generating $6 or $7 million a week in revenue. Like, if the protocol is making $7 million a week and the token is going down and to the right, that means there is no value accrual mechanism. Just another reason why people would call crypto scam, you know, crypto scammy, because this is super scammy. Like, you think that, you know, you can buy the token to get some type of connection to the revenues of the protocol, but for the most part, you can't. For the vast majority of these protocols, you just can't. There's no way to gain exposure to those revenues. It's a fugazi for the vast majority of this stuff. You know, Kita, another great example of a fugazi, you know, down and to the right, because there's no connection between what the protocol does and the coin. You know, we can go and talk about these coins till the cows come home. The vast majority of them either the protocol doesn't make any money, or there's no connection between the revenues and the coin. It's a real shame. So I want to bring it back on over here to X, and let's just see what's moving and shaking over here. Yeah, check this out. How European elites arrived during a heat wave to explain why your AC is killing the planet. Yeah, exactly. Those faggots in Europe. Ugh, the EU people. Okay, so this guy, Mario Nafal, he's some type of scammer. He's got a sordid past, but he does post interesting stuff on X, but I just like dislike him as a person, though. He's also anti-Israel. And, you know, anyone who's like overtly anti-Israel, I'm just going to fuck them. So, yeah. And, you know, he's talking about buying a $4,200 Mac Studio for local AI that missed NVIDIA V100s from old data centers. That really, NVIDIA V100s from old data centers are selling on eBay for $250. Total build cost, $330. Runs GPT 20B at home, 1/3 the price of an RTX 3090 with better memory. Huh. What is an NVIDIA V100? What is that? NVIDIA V100. That's got to be one of those old ancient cards. Is that what that is? I've got to see this because I've been thinking about local AI a lot recently. NVIDIA V100 32 gigabyte, but it's got to be just slow. No, they're not. They're not selling for $250 on eBay. See, that guy, Mario Nafals, he's full of shit. Like, he's so full of shit. NVIDIA Tesla V100, HBM2 VRAM, accelerator passive cooling. Yeah, these are not 1/3 of the price of a 3090. These are the same price as a 3090. You know, these are the exact same price as a 3090. So this guy fucking Mario Nafal's full of shit. He's so full of shit. And he's also a scammer. It just so happens that he's got a massive following on X. Fuck that guy. All right, take a look at open interest. Degens are back. Oh, huh. BTC, aggregated open interest coins candles. So there are some accounts on X where like the guys post retard shit, and Ted is one of them. But I kind of like, just taking a look at his retard shit. This doesn't make any sense to me. Steve Su. Interesting GLM rumor. Okay, so GLM, ZPU, GLM is an amazing model. So GLM 5.2, amazing model, and so much cheaper than Claude, than the Anthropic models, so much cheaper than the OpenAI models. And guess what? So here's GLM 5.2, and they're comparing it to Opus 4.8. This is not a solid comparison because GLM 5.2, I think, is better than Opus 4.8. And they should be comparing it to Fable 5, which you can't even use anymore because apparently it's too good or something. GLM, I think, is better. You should compare GLM to Fable. GLM 5.2, you should compare it to Fable 5. And so when you do that, the Fable 5 tokens are way more expensive than the Opus 4.8 tokens. And so it's basically 90 or 95% cheaper. GLM 5.2 is compared to Fable 5 for excellent output. So yeah, Anthropic and OpenAI are fucked. Riddle me this. How in the world can OpenAI and Anthropic, compete in a marketplace where China and their Chinese competitors are no longer behind in model quality? They're at par, and they're 95% cheaper. Doesn't that immediately kill OpenAI and Anthropic? Aren't they dead in the crib now? I don't get it. Why have markets not rolled over on the back of these news? This news here, GLM is better than Opus 4.8. It's on par with Fable 5, and it's 95% cheaper than Fable 5. And corporations are already leaving Anthropic and OpenAI because it doesn't make any sense to use them. Like, why would you can't pay those API costs to use OpenAI and Anthropic products if there's an open source, open weight Chinese model that's just as good and 95% cheaper. Like, it doesn't make any sense. So that's a problem. Anthropic and OpenAI are fucked. Yeah. So commercial real estate is fucked too, no doubt about it. Commercial real estate delinquency rate, the highest level in history. Well, yeah, because after COVID or during COVID, fucking Western communist governments all shut down the world together. So no one was allowed to go to work. And then, when things opened back up, it was all, Zoom meetings and shit. So no one, actually goes to an office anymore, which means businesses don't need office space, which means, office building owners don't have, people to lease their office space from them, which means they don't get any revenue, which means they can't pay the bank. So, yeah, this should probably continue to climb. Yep, that's horrible. Let's see what else we got. List of Western companies moving AI workloads to Chinese models. See, I was just talking about this, and but you got to always take a look at the account. So, okay, great, 3,000 followers. Lindy, DeepSeek. So I don't know what Lindy is. I probably should know what Lindy is. I think it's some type of like developer tool. Cursor, I live in Cursor. Cursor going to Kimi. It's a Chinese model. Coinbase, see, I was saying GLM 5.2. Kimi, I think, is the one you can run locally on relatively cheap hardware. GLM 5.2, to run GLM 5.2 locally and get decent token speeds, you need between $25,000 and $75,000 in hardware to be able to actually run this model locally with decent token speeds. Shopify going to Quen is another Chinese open weight model. Airbnb going to Quen. Uber Eats. So Uber recently was in the news because they blew through their AI token budget in like 4 months. Their year-long budget, they blew through it in a couple of months. So yeah, I mean, it only makes sense. They have to migrate to a cheaper model. It's the only option. Siemens going to DeepSeek and Quen. Chaps Vision, I don't know what Chaps Vision is, going to Quen. Microsoft, this is so funny. Microsoft, they basically own OpenAI, and it says testing DeepSeek v4. That is hilarious. Even Microsoft, who owns OpenAI, is going to the Chinese models. Absolutely hilarious. Use the 30-30 rule to avoid burnout. After 30 minutes of work, quit and disappear into the mountains for 30 years. Oh, man. Exactly. Yeah, Musk is great. Let's check it out. This is a classic meme, but it's not the entire picture. Most of the grift and graft happens at the NGO level. Yeah, no shit. You guys know how much money has flowed into African fucking NGOs and shit? Yeah, 1.4 trillion over the last, I don't know, couple of decades. But this is it's done nothing. It's done nothing. Nothing. If anything, Africa is worse. South Africa was way better under, whatever that apartheid state was way better. Objectively better. The fucking Congo under the brutal King Leopold was objectively better than it is today. All of those French colonies, those places were better when white colonists ran them. It's just objectively better. And now look at it. It's a fucking shithole. Yeah, shithole people and a shithole. And this guy, CZ, you talk about shithole people, man. This guy's a complete piece of shit. Fuck that guy. Chinese fuck. Yeah, let's see here. So maybe I'll turn on reset the snooze. My entire AI stack is now Chinese. Yeah, I mean, for real, you've kind of got to, like the AI stack has to be Chinese now. There's no reason to use Anthropic or OpenAI. No reason now, because the Chinese models are just as good and 95% cheaper. So yeah, vibe coders, everyday struggle in 15 seconds. Oh my God, this is hilarious. It's so true. This is so true. Can you cut it in half? The model. Let's see. It's so true. Yeah, see, they can't understand what you want them to do sometimes. GLM 5.2 is really good though, but it still makes mistakes like that. They still make mistakes like that. Pretty soon, give it another couple of months and the models are going to be so good, and especially the Chinese models are super cheap, that even someone who's not an engineer can build the best tool to do anything, the best software to do anything. Okay, let's see. Cool. Let's check out. Let's see what else is going on. Die of diarrhea and oh man, yeah. Oh, this guy's great. So this account definitely worth a follow. So the quant systems posts that he puts out on X, amazing value here. So I'm definitely going to take a look at that later. Hermes agent. If you're not using a Hermes agent, you need to be. GitHub repos for scraping the internet. Yeah, there's a lot of web scraping repos out there. I think one of them is has a bazillion stars on GitHub. Iran is a Muslim dictatorship, and it needs to be destroyed. The Muslims who run that shit need to be destroyed. Let's see here. Vibe coding Tom Door for websites auto. So this is great. This is great. So I'm gonna star this. I'm gonna take a look at this real quick, because there's so much value on GitHub and it's free. It's all free. You don't have to go and recreate the wheel. How to make money with vibe coding, a practitioner's playbook for websites, automations, and micro software as a service businesses. Choose your revenue stream, AI automations, build fast, modern websites for local businesses. Oh, I'm getting a Telegram notification. Crossed, lit long. Oh no. It looks like my lit position is selling off. Is that what's happening here? A little bit. So I like getting notifications in Telegram about positions here. I've got to stop it at $1.85. Yeah, look at that. So it got up to $2.01, 201. Maybe my TP was a little bit too aggressive for that lit long. Huh. Well, regardless, thanks you guys for joining me live. I rant and rave on stupid shit. If it's just me and Mike isn't here, then I'm going to get unhinged for sure. I don't even think that I'm unhinged, man. I'm just honest and authentic. So I just say what I think, and I'm not afraid to say what I think. So, take it or leave it. It is what it is. But I appreciate you guys for joining live. It's 2:07 p.m. Eastern Standard Time, and I'm going to get back to work on figuring out how to generate signal in my app there. So appreciate you guys. Like, share, subscribe if you got some value from this. And once that app is done, man, it's going to be super cool. So we'll talk tomorrow. Have a good rest of your day.